Ladies and gentlemen, good day and welcome to Mitsu Chem Plast Limited Q1 FY27 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Thakur from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Mitsu Chem Plast Limited. From the management team, we have Mr. Manish Dedia, Managing Director and Chief Financial Officer, and Ms. Kashmira Dedia, Vice President, Finance and Accounts. With that now, I hand over the call to Mr. Manish Dedia for the opening remarks. Over to you, sir.
Thank you. Good afternoon, everyone. It is a pleasure to welcome all investor analysts and participants to the Mitsu Chem Plast Limited Q1 FY27 earnings conference call. We sincerely appreciate your continued support and interest in our company. Q1 FY27 reflected continued progress for Mitsu Chem Plast Limited with focus on strengthening our manufacturing capabilities, improving operational efficiencies, and supporting growth across our diversified product portfolio. During the quarter, the company continued to build on its capabilities across industrial packaging, healthcare, infrastructure, and other value-added applications. We are also pleased to announce a proposed addition of 3,550 metric tons per annum to our existing manufacturing capacity of 32,450 metric ton per annum overall. This expansion is aimed at strengthening our ability to cater to growing demand across key product segments and supporting the company's long-term growth plans. Our existing capacity utilization stood at 64% in FY26, providing a strong base for further product and capacity expansion. Our diversified product portfolio continues to remain a key strength. We operate across blow molding, injection molding, and custom molding applications, serving industries including pharmaceuticals, chemicals, agrochemical, FMCG, food, healthcare, and other industrial segments. The company currently operates 4 manufacturing facilities with 53 blow molding machines and 22 injection molding machine and installed capacity of more than 32,450 metric ton per annum. Healthcare furniture remains an important growth opportunity for the company through our Furnastra brand. Furnastra is focused on innovative and durable hospital furniture components with an emphasis on quality, ergonomic design, and customer-centric solutions. We continue to see opportunity to strengthen this vertical and expand its market presence. Our packaging portfolio also remains an important area of focus with continued emphasis on products such as pails, containers, jerry cans, and specialized caps and closures. This initiative are aligned with our broader transformation strategy focused on operational excellence, data-driven marketing, scientific innovation, and empowered teams. This company also continued to maintain a strong export presence across 17 countries, supported by a diversified customer base across pharmaceutical, healthcare, chemical, FMCG, and other industries. Our in-house R&D design and value engineering capabilities further support our ability to develop customized and value-added solutions for customers. The company delivered a strong financial performance during Q1 FY2027. Total income grew 11.62% year-on-year, while EBITDA increased by 209.50%, supported by improved operating efficiencies and a stronger product mix. Net profit increased by 566.23% year-on-year, reflecting a significant improvement in overall profitability. Going forward, our focus remains on expanding manufacturing capacity, strengthening our product portfolio, improving operational efficiencies, and leveraging opportunities across industrial and packaging segments. We remain committed to building sustainable growth and creating long-term value for all our stakeholders. Before concluding, I would like to thank our employees, customers, business partners, and shareholders for their continued trust and support. With this, I conclude my remarks and now request Ms. Kashmira Dedia to take you through the financial performance for the quarter ended June 30, 2026.
Thank you. Good afternoon, everyone. I will now take you through the financial highlights for Q1 FY27. For the first quarter of financial year 2027, Mitsu Chem Plast Limited reported strong improvement in profitability, supported by better operating efficiency and improved product mix. Total income for the quarter stood at Rs 9,532.78 lakhs, registering a growth of 11.62% year-on-year, compared to Rs 8,540.39 lakhs in Q1 FY 2026. EBITDA increased significantly to Rs 1,549.48 lakhs, registering a growth of 209.50% year-on-year. EBITDA margin improved to 16.29% compared to 5.87% in Q1 FY 26. Representing an expansion of 1041 basis points. Net profit for Q1 FY27 stood at Rs 873.83 lakhs, registering a growth of 566.23% year-on-year, compared to Rs 131.16 lakhs in Q1 FY26. Net profit margin improved to 9.18% compared to 1.54% in the corresponding quarter last year. Earnings per share for the quarter stood at Rs 6.44 compared to Rs 97 in Q1 FY26. On a sequential basis, the company also continued to maintain strong profitability. EBITDA stood at Rs 1549.48 lakhs in Q1 FY27 compared to Rs 1422.74 lakhs in Q4 FY26. While net profit increased from Rs 771.73 lakhs in Q4 FY26 to Rs 873.83 lakhs in Q1 FY27. The strong improvement in EBITDA and net profit reflects the benefit of improved operating efficiency and a stronger product mix during the quarter. Looking ahead, our priority remains focused on capacity expansion, strengthening our diversified product portfolio, and improving operational efficiency. The proposed addition of 3550 metric ton per annum to our existing capacity will provide additional manufacturing capabilities to support growth across key product verticals. We will continue to focus on higher value-added opportunities across packaging, healthcare furniture, and other industrial applications. Our transformation agenda remains centered around Parnastra, enhanced packaging products, operational excellence, data-driven marketing, scientific innovation, and empowered teams. The company continues to work towards its long-term objective of achieving Rs 1,000 crores in annual revenue by FY28. With that, I conclude my financial update. I will now request the moderator to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vinod Shah from VS Ventures. Please proceed.
Yes. Hi, good afternoon, sir. Am I audible?
Yeah.
Yeah, sir. So I just have a couple of questions. So within the packaging portfolio, so which products are currently the strongest demand?
So currently everything is in a demand, sir, and so the product, the containers also in a big demand, and we have three verticals, which is containers, furniture part, and others. So all vertical are doing very well.
Okay. And where do you see the highest like incremental opportunity within this?
Sorry, sir.
So where do you see the highest incremental opportunity in
Sir,
next?
No, I'm not able to hear your voice. Sorry, sir.
Am I audible now?
Yeah. Now perfectly all right.
Yeah. So I was saying, where do you see the highest incremental opportunity in next 4 or 5 years?
In both. So all verticals we are looking at very higher demand, as well as the profitability also good in all the verticals. Sorry.
Okay. And sir, you have like currently around 500 SKU. So are you looking to like rationalize low volume SKU and focus production capacity on
So we have already done that.
products?
Yeah. So we have already done that, and this is you can find the result because see, we have done rationalized things. Even see, we are doing lot of product expansion and product reducing, like both the things we are doing together. So which product is not giving us a better margin, better turnover, and a better throughput, then we are actually giving away that product, and we are also introducing new product where we are very sure that we are getting some good improvement there.
Okay. And sir, you have around like 700 customers or something. So
More than that.
yeah. So are you
Sir,
like?
can you speak little louder because your voice sometimes going away?
Yeah. Is it better now?
Yeah,
Hello?
now it is better.
Yeah. So I was saying you have like around 700 plus customers, as you mentioned. So
Yeah.
are you approaching the next phase of customer acquisition, or are you looking to deepen the penetration in the existing customers?
Sir, we are adding customer every quarter and quarter. This time also we have added more than 30 plus customers in our kitty. So every quarter we are also adding, we are also managing the customer. The reason, the better throughput, better profitability, and better turnover. So we are always having addition of the new customer. The last year we have total added around more than 100 plus customer we have added. More than 150 customer we have added, sir.
Oh, okay. That's great, sir. And sir, just one last question. So you mentioned you see the growth like across across your all verticals. So where do you see the revenue mix evolving in next 12 to 18 months?
I mean, like total revenue, this way it stood, maybe we can calculate this way. And also we are, you must have seen our expansion plans also.
Mm-hmm.
We just increase our expansion. So everything will come up. So whatever, this is in line with the announcement of 1000 CR. For definitely we are in line with that. So we are expanding our capacity. Yeah.
Okay, sir. Thank you. That's all. I will join back with you. Thank you.
Yeah.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Nishita from Sapphire Capital. Please proceed.
Hello, am I audible?
Yes.
Yes, ma'am.
Yeah. So I just wanted to understand our margin improvement. So why our margins have improved quite a lot from around 5-6% to 16%. So I wanted to understand what led to this margin improvement, And also because with the geopolitical situation, there must be a lot of pressure on our raw material price. So how are we able to maintain this margin at 16%, and is this margin sustainable?
Okay. Yeah, good question. I think your first question was how do you arrive this profit margin, right?
Yes.
Yeah. So I think in my speech I said due to a lot of innovation and a lot of manufacturing efficiency and overall operating efficiency and product mix, that gives us a good quarter. So you must be seeing from the Q3 there is some or the other improvement. So we are trying to get over a lot of things which was a bottleneck or something like that. So we are improving on a everyday basis, and I'm like, this is the result. With this is the result. About your second question, yeah, there is a big geopolitical thing going on. But I think we have stopped buying imports since many years, and as locally material available in India, and hence we are buying from local only. And I think local producers we have a very, very good relations with them, and hence I didn't find we found a full support from them to run the industry. That's what I can say.
Okay. So, have we faced any raw material price increase then, since we have such good support from our local producers?
Yeah. Customers are increasing. Suppliers are increasing prices as per the geopolitical situation, the crude and everything based on that. And we are passing on the customers. Customers are also understanding that if this is a problem, and then if they do not give a price increase, we will not be able to supply, because not be able to supply in the loss. So I think this is a big thing for suppliers also, for customers also. Everybody understands the situation, and hence we are giving the price increase to suppliers, and customers also giving us.
Right. So, have we able to pass on the complete price increase to our customers?
Who?
Have we able to pass the complete price increase in raw material to our customers?
Yeah, that's what I said. In just last statement I said, the customers also understood very well. Then, because the geopolitical situation, everybody knows what are the problems.
Okay, understood. And my next question is on our CapEx. So you mentioned that we've proposed additional capacity of around 3,500 metric ton per annum. So what will be the required CapEx for that, and how are we going to fund that CapEx?
I think we have already said that. So these are some of the good capex we will require, and most of the capex it's a mixed one. Some capex where we are doing the mixed things, internal accruals and the debt we are doing.
And what is the amount of capex required?
Required for the what we have done till now, yes?
Required for the 3,500 metric ton additional capacity that you've proposed.
So it's approximately 2 CR.
Okay, understood. And
it depends on which kind of machinery, from where you are getting, how you are getting. It's all depend on this.
Understood. And can we expect this additional capacity to be operational in FY27 itself?
Yeah, it is already operational. So we have announced after everything successful run.
Okay, so the additional 3,500 capacity is already online?
Yeah, already online.
Okay, understood. And my last question is on revenue growth. So we've grown like our margins have improved quite a lot and we are growing also extremely well. So if you can give some sort of guidance on where can we see the growth trajectory in FY27?
Sorry, I am not able to understand your question that very well.
I just wanted to understand, like in FY27, what sort of revenue growth can we see?
Yeah, so good. I think going forward, we are looking for the same growth of quarter on quarter. Almost same. I will not say 100% same, but almost same growth we are looking for the quarter on quarter. As I always mention in my con call, till now, since last 1 year, that we always, now we are more focusing on bottom line rather than top line.
Okay, understood. So, yeah, understood. Thank you so much.
Thank you. The next question is from the line of Rajesh Gupta, an individual investor. Please proceed with your question.
Yeah, hi. I'm audible?
Yes, sir.
Yeah, okay. Could the management clarify the rationale for selecting Recurve Securities Limited as the non-promoter allotee of 2 lakh warrants? Recurve Securities have any existing investment, business, advisory or relationship with Mitsu Chem Plast? And is the investment being made for...
I think, this is just as an investor, he has come. There is a small amount, it is a very, very, small companies, it is always a challenge to get the investor.
Okay, there's no existing investment they have in Mitsu or any business or advisory relationship with Mitsu.
Right.
Okay. One more question is the 1,000 crore target for FY28. The growth has to be much more than what has been in the preceding quarters. So, I mean, we expect the quarterly revenue to move from 95 last quarter to 120 or 130 crores so that we are in line for the 1,000 crore revenue target by 28.
I agree, fully agree with you.
Okay.
Yes, and you had very well this thing. Yeah, sir, I think this quarter is being a very low quarter by revenue. As I always mention, I think you are also a follower of the investor con call. So, we are more focusing on the bottom line rather than top line, number one. Number two, yes, the top line is also in our mind very well. We are trying all the aspects, all the things very well. We have already launched. We are coming up with the IBC project, which is coming up in maybe third quarter. So all these things is like in line of growth. So definitely.
Yeah.
You'll find the revenue growth also very soon.
Okay, great. So one last question. We have been running the capacity at 64% approximately. So what is the rationale behind increasing the capacity further of about 3,000 is what have been said. There's still huge scope for capacity utilization from 64 to 70 or 80 or 90. For production increase.
No.
This additional capacity is anything. Yeah.
Sorry. Go ahead. Sorry.
Yeah. So this additional capacity, is it something for very specific machinery or something specialized thing? Or why additional capacity when the existing capacity is not being used fully?
Okay. So we have as this is as per plan. Now, in some quarter, there is a seasonality. You can go maximum to 85% capacity. Now, there are some of the capacity in last year, Q1 and Q2, you must have seen that was a very, very low capacity utilization. So, the overall, it was a 63%, 64% utilization every the last year. Now, coming back to your question, why you have increased if it is not utilized properly. So we have to plan little ahead, because in the blow molding and injection molding industry, we have one challenge of getting the machinery on time, getting the machinery, the one challenge after getting the machinery, the commercialized and everything, it takes a lot of time. So around 6 to 9 months it takes to start to finish. So we have to be ready enough with all the infrastructure things. We have taken our unit, one more unit in the month of, I think, January, February, I don't recollect exactly. We have announced that last quarter of 26. But now we are going for expansion, because we have an infrastructure ready, so we can go ahead for a capacity enhancement.
Okay. Great, sir. Thank you very much, and all the best to the company.
Thank you, sir.
Thank you. The next question is from the line of Praveen Sharma, an individual investor. Please proceed.
Hello. Am I audible?
Yes, sir.
Yeah. Good afternoon, sir. Congratulations for the excellent set of numbers. I hope the momentum will continue. My only question is regarding the IBC project. Where do we stand, and when do we expect the commercial operation to start, and how big is the opportunity there? Thank you.
Yeah, definitely. As I just mentioned that most probably Q3 we will start commercial production. And it's a good opportunity. It's a new product in the market, and as a management, we are seeing a good opportunity in this particular market. But once we come up with that, and then, you have to taste the water.
Mm-hmm. So will we be doing an additional capex for that, or the existing capacity will suffice? The machines which are there will suffice for that requirement?
Complete different machinery for the IBC, complete new machinery.
Mm-hmm.
Sorry.
So how much are we going to invest in that?
Sir, we will announce very soon on that, because we haven't given all the details. Once we disclose everything, you'll come to know everything on the same.
But that will start commercial operation in Q3. That is expectation.
Sorry, sir?
Commercial operation will start in Q3. Correct?
Approximately, yes.
Okay. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Saket Saurabh from Sagari Capital. Please proceed.
Hi, am I audible?
Yes, sir.
Yes, sir.
Sir, just to be sure, sir, last quarter you told that we have a cost plus markup kind of an arrangement with our clients, where the raw material is a pass-through, but our markup is percentage of raw material price, not say EBITDA per ton or something like that. Is that fair?
Yes.
So by that logic, sir, if the raw material prices increases, then our profitability also goes up, sir?
No. So please understand, we have said a lot of other expenses also are there, which is a good expense. Coming back to operating efficiency, product mix, the other advantage of value addition, value engineering. So definitely you must have seen. See, raw material prices are changing from quarter. I think this quarter majorly. The war started from 1st of March. But you can see our improvement from since third quarter. As like we are always doing something or the other on a value addition.
Got it. Sir, what is the typical pass-through? Is it like daily basis, monthly basis, quarterly? So how does the pricing pass-through takes place in our case?
I did not understand, sir, your question very well.
No, so for example, when the raw material costs are passed through, and are they done on a monthly basis or quarterly basis? How does the raw material pass through takes place? For example, if the cost price was 100 today, then the next adjustment with the client will happen 1 month later or 3 months later, or say almost on a daily basis.
So it's a 1 month later only. Generally, it's 1 month. If it is a normal case. If it is a specialized case, we have to talk to individually one-on-one customer. It's a separate thing.
And sir, what is the exports share in our total revenue right now?
This one.
Yeah.
Around more than 2%.
Okay, 2%.
Yeah, approximately 2%. Just a minute, I'll see.
So almost 98% is domestic then, right?
Yes, sir.
So sir, now if I look at the Farnastra segment, so we were having a long-term relationship, I think some contract with a global player, right? So that is yet to kick in because that 2% seems to be on the lower side, or yeah. So when is that likely to kick in, sir?
Very, very lower side. Very, very lower side. Because see, it takes a lot of time to establish our product in the international market. Now we have already entered into that. Now the results are still awaited.
Okay. So any timeline as to when it is likely to, say, ramp up, and what is the, say, likely revenue that we can look at from that particular relationship?
It's ongoing process, sir. It is ongoing process. I mean, like, completely ongoing process.
Okay. Fair point, sir. Now, one thing that you have been, I think really, I've been impressed at the way you have been focusing on bottom line, right? Moving from top line. But one feature of our company, if I look at, say, slide 33, where you have talked about quarterly EBITDA, then EBITDA has been quite volatile, sir. And so now we are hitting at almost 16% EBITDA. Now, is this now sustainable going forward? Because I think last quarter we were still telling the overall guidance to be 10 to 12% kind of EBITDA. So is now 16% the new normal? Yeah.
Always, I think many of the quarters I'm saying, so generally 10 to 12% is a normal this thing. Okay. Now, see, all the efficiency, everything we are already optimization of product and everything, we are still ongoing process. Now you can always see some more difference, but double digit EBITDA will remain the same for sure. So now that double digit, how much it grows, I mean, like, you'll have to see quarter to quarter. But yes, we will try to sustain it as good as possible.
Okay, sir. Okay. And sir, you talked about, the current run rate of QOQ, sustaining. So right now, I think QOQ growth, if I look at, was around 10-11%. From 87, we went to 95. But then also you clarified that 1,000 crore is still under, is within our reach. So does that mean that now our quarterly run rate would be, say, upwards of, say, 20 odd percent? Only then I think that 1,000.
It is obviously, please understand, our the capacity expansion we have just given last week.
Okay.
So you can analyze, that things also will add up in the capacity.
Okay, sir. And sir, the recent fundraise that we did via Warrant, what is the areas of investment that you are looking at? Is it capex or it's more in R&D? Any thoughts on that, sir?
I did not understand your question, sir.
So I think you did some fundraise via warrants, right? So what is the use case for these funds? Where are we going to use that, sir?
Working capital.
Okay, working capital. Okay, sir. Thanks for the opportunity and best of luck for coming quarters.
Thank you. Thank you very much, sir.
Thank you. The next question is from the line of Aditi Jain from Wealth Management Consultant. Please proceed. No, ma'am. Can you please speak loudly?
Hello, am I audible?
Yeah. Yeah.
Not audible, madam. I'm not able to hear a single voice. I think there's one lady speaking, but no voice.
Sorry, sir, my question is, would the Hyderabad facility eventually become a manufacturing or assembly unit if demand from the southern market grows significantly?
Ma'am, either they need to change the handset. I'm not able to understand a single word from this. Hello, can you hear our voice?
Hello, sir. Am I audible now?
Yeah, very well, yeah.
Oh, okay. So my question was, would the Hyderabad facility eventually become a manufacturing or assembly unit if demand from the southern market grows significantly?
Not as of now. Once we haven't decided yet anything.
Okay. And how does the need to evaluate whether an R&D idea has strong commercial potential before investing heavily on
Ma'am, sorry. Ma'am,
development?
your voice is disconnecting in between. Sorry.
Aditi ma'am, may I request you to rejoin the queue? Please rejoin the queue.
Yes.
Not able to understand the questions very well. Yeah.
The next question is from the line of Rajshri Jain, an individual investor. Please proceed.
Hello, am I audible?
Please continue.
Very low volume.
Hello. Am I audible right now?
Yeah.
Yes, now it is perfect.
So my first question is the injection molding business currently operating at a materially different utilization level compared with blow molding, and would shifting the product mix towards injection molding improve overall asset productivity?
Okay. Nothing like that. I think blow molding and injection molding goes hand in hand. Many of the product in injection molding is a separate than blow molding. But our major consumption and the revenue comes from blow molding only. Yes, in injection molding, some of the products are revenue earner also in somewhat extent. Yes. And in somewhat extent, the injection molding product gives support to blow molding industry.
Okay.
Hello.
So the presentation highlights a patented CPR-related hospital furniture solution. So how much of the company's healthcare product portfolio is now protected through proprietary designs, patents, or customer-specific engineering?
Approximately, as of today, we are at around 19.80%. So it includes furniture parts and other parts, and the rest is 80% is our packaging business.
Okay. So, given the long approval cycles for hospital furniture products, once a product is approved and incorporated into a customer's design, so how sticky is that business compared with conventional packaging products?
No, sorry. Can you repeat the question, please, if you don't mind?
Yes, sir. So, given the long approval cycles for hospital furniture products, so once a product is approved and incorporated into a customer's design, so how sticky is that business compared with conventional packaging products?
Yeah, both are a different business altogether. I can't compare both the business together. The customer demand, the process, and everything is a separate.
Okay. Okay, sir. Thank you. Thank you for answering my questions. If I have any more questions, I'll get back to you with it. Thank you.
Sure.
Thank you. The next question is from the line of Nishita from Sapphire Capital. Please proceed.
Yes, thank you for the follow-up question. So I just wanted to understand, you mentioned that our capacity expansion has come just last week, so and that is going to add to our revenue growth. So what sort of revenue can we expect from this new capacity expansion in FY27?
Yeah, ma'am, that we will announce very soon. So, I mean, like, you will see now hardly 1.5 months is left. So, let us get this quarter done, and then you will come to know many of the things.
Okay. Okay, understood. Thank you so much.
Thank you. The next question is from the line of Nidhi Purohit from Phoenix Capital. Please proceed.
Hello. Hello.
Yes, ma'am, continue.
Okay. So FY26 capacity utilization.
Ma'am, can you please be a little louder?
Sure. FY26 capacity utilization was around 64%. So with another 3,550 metric tons of capacity being added, what kind of utilization are you expecting across the expanded capacity by the end of FY27?
What is the question? I've not understood yet.
Okay. I'll just repeat it, sir. FY26 capacity utilization was around 64%. So with another 3,550 metric tons of capacity being added, what kind of utilization
Now I understand.
are you expecting?
Approximately it will remain the same. 64, 65 or 70% is the healthier for company.
Okay.
Yeah.
Sir, also you had earlier mentioned that 10% EBITDA margin would be a sustainable level. So given that Q1 margin was 16.3%, so what are the key operational factors that could help you to sustain these margins at this?
So sometimes some products goes on a very high margin. Some things comes up like 10 to 12%. So I always speak on an average. So it's a seasonable product every quarter to quarter, but sustainable margins are like 10 to 13%, or 10 to 12% is a very, very reasonable amount, I would say, always. Whatever additional what we are getting is a you can always say operational efficiency and other things, other factors.
Okay, sir. So, also, could you give me a sense of where this additional...
Ma'am, you have to speak a little louder. I'm not able to hear your voice.
Sorry. So, could you give us a sense of where this additional 3,550 metric tons capacity will be utilized, and which product categories do you expect to contribute most to the incremental capacity?
All three categories, different products, different machines are there. So I think this time, we have come up with all the, so it will be utilized in all three product vertical. Containers and furniture parts also.
Okay. Okay. Thank you. I'll just join back with you. Thank you.
Thank you. The next question is from the line of Siddhi Mehta from Orient Capital. Please proceed.
Hello. Am I audible?
Yes, ma'am.
Very low voice.
Am I audible now?
Yeah, perfect.
Okay. So given that the healthcare segment already contributes around 19.8%, what would be a realistic mix you are targeting over the next 2 to 3 years?
Hello.
Hello.
Yes.
Yeah. Should I repeat my question?
Please.
Okay. The healthcare segment already contributes around 19.8%, right? So what would be a realistic mix you are targeting over the next 2 to 3 years? And how would a higher contribution from this segment impact the all-over EBITDA margin profile?
All verticals are doing their own these things, but yes, definitely we are also looking for a big growth in furniture parts and other parts also. So definitely in going further, you'll have a good business, and revenue sharing, I mean like revenue in a percentage sharing, you will find more in furniture parts and others for sure than container. And hence as I think your question was more on EBITDA.
Okay. And your focus on profitability, are there any lower margin products or customers where you are deliberately willing to sacrifice volumes while prioritizing higher margin opportunities across containers, paints?
Yeah, that's what I already said in my earlier questions, that we are going away with many of the products which are not good profit margin or profit drainer. So definitely we are closing that product.
Okay. And since all the existing verticals are showing growth and IBC will add another growth driver from Q3, can you indicate which 2-3 businesses will contribute the largest incremental revenue towards the 1,000 crore milestone while maintaining the company's focus on profitability?
So obviously the packaging will be the most, because my 80% coming from them. So definitely, but till I think 1,000 crore also, we will have the almost similar line of business. So we are expanding in both the things, container and furniture parts. So I think 80-20 ratios will remain, most of the time it will remain the same.
Okay. And okay, I think that's it. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Karan Thakur for closing comments. Over to you, sir.
Thank you, everyone, for joining the conference call of Mitsu Chem Plast Limited. If you have any further queries, you can write to us at research@kirinadvisors.com. Once again, thank you, everyone, for joining the conference.
Thank you.
On behalf of Kirin Advisors Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line. Thank you, everyone.